Celsius Energy, what an absolutely amazing story this company is. From 5 years ago being a very niche brand, not many people had ever heard of it, to now having massive displays throughout grocery stores, throughout the United States of America. You can find it in Costco, you can find it in Sam's Club, you can find it in so many big stores, and it's become a very large brand over the last number of years. Very similar to e.l.f. e.l.f. was much of a niche brand, makeup brand, cosmetics brand, 5+ years ago, and it has grown to massive shelf space. You can go into any Target, Walmart out there, and you will find massive section of e.l.f. These companies are incredible what they have done, right? Their stock prices tell the story better than anybody could tell the story. Celsius' stock in the past 5 years is up 2,384%. Most people never make 2,384% in their entire lifetime of investing. And this stock has returned that in just the past 5 years. That's a life-changing stock. e.l.f. Beauty is a company I own, and it's definitely been game-changing money in regards to that stock. It's up 1,300% roughly. These stocks have been extraordinary. But that is the past. Now we are focused on what's going on today. And today, Celsius is a brutal stock. It is down 65% in the past 6 months. That is unbelievably sharp sell-off in this stock. Celsius Beverage in the past 3 months is been almost cut in half. It's down 47.5% in the past 3 months. Absolutely brutal for this stock. e.l.f. Very similar situation. Look at the past 3 months with e.l.f. Beauty. The stock is down about 49%. It has been basically cut in half in 3 months. It's extraordinary, right? I'm here to tell you today, buy every share in sight of both of these stocks for the next 3 to 6 months. Every single week, these stocks are a buy. And I'm going to explain in this video here today why these stocks are a buy. We'll go into detail in regards to these and why these should be bought every single week. Hope you guys enjoyed today's video. As always, I appreciate y'all joining me. Thank you for being subscribed to the channel. And thank you everybody that hits that thumbs up button. I appreciate each and every one of you. And by the way, this is the first time I've done a garage video in the longest time, right? It's been a long, long while. My equipment wasn't even set up or anything. It's been so long since I did a garage video, but I thought, out of respect to the new guy, I thought we'd do a garage video here today, which, by the way, I did a video on that car in depth. If you're interested in that, I did that earlier this morning. So also pin comment down there if you're looking to apply, join a private stock group, private wealth group, get access to all my best course curriculums, access to 1000xstocks.com, all that stuff. That'll be pinned comment down there today. Okay, why is Celsius stock and e.l.f. stock a buy? Every dip in these stocks is a buy for the next 3 to 6 months. Here's why. So where I'm starting out here today, 1000xstocks.com, we have a little hidden feature that not a lot of people know about. They know about the search, the compare, earnings calls, SEC filings, the valuation tool gets used a lot, the financials, the charts, but there's a little thing down here that can be very helpful. It's called the education section. And this goes into a bunch of different things on how to do it, how to decode a balance sheet, income statement, cash flow, strong moats versus weak moats. It goes through examples of different companies, right? How to value a dividend stock, how do you value a growth stock, dividend investing, portfolio management. But I want to focus in on this section right here. We have this one, which is called How to Perform Swot Analysis. It goes very in-depth on SWOT analysis and gives some real-life examples, right? But I thought we'd perform SWOT analysis on both of these companies. So here's e.l.f.'s SWOT analysis here. I did, when it comes to the S, that's strengths, weaknesses is the W, opportunities is the O, and threats is the T. Okay, and this is something you'll learn in pretty much like a business 101, right? They might not give you the best examples, always a SWOT analysis, but you'll learn this in very early on business classes in college. I remember pretty much being a freshman in college and learning about SWOT analysis. e.l.f. The strengths when it comes to e.l.f. is their brand. Their brand is, I think, the most successful brand on social media. What they've done with this brand in making them super successful on Instagram and TikTok and YouTube is absolutely something that should be studied by brands in the future. It is incredible. And another strength for this company is their product and their price. They have a very good product that's at a very compelling price points. If you look at most of e.l.f. price points, I mean, most of their products are under $15 and a lot of them are under $10. It's affordable to the masses. It doesn't matter if you make $40,000 a year, if $20,000 a year, if you're a college student, it doesn't matter if you're a multimillionaire, everybody can afford e.l.f.'s products, which is huge. Another thing I would look at as a big strength for e.l.f. is their CEO, Tarang. Absolutely unbelievable job he's done with this company over the last number of years. He's the most successful person in the cosmetics industry over the past 5 or 6 years. And it is really not, it's him and then it's everybody else in this industry. It's unbelievable the job he's done. Stealing market share from competitors, building up this brand to be such a successful brand on social media. It's incredible what he's pulled off. So I would say he's definitely a massive asset to that company, and he's still actually relatively young in regards to CEO terms. So if he wanted to lead e.l.f. for the next decade, he easily could. Another strength I would say with e.l.f. is they're very successful online. When I say online, I'm talking about their actual e.l.f. cosmetic store. A lot of people shop directly through e.l.f.'s website. What's so important about people shopping direct through e.l.f.'s website? There's a few things. One is then e.l.f. can control their customer, right? They can market to their customer, send marketing messages, let them know about future products and launches and those sorts of things, right? Additionally, guess what? You're likely going to make way more margin than if somebody bought that same exact item from Target or from Walmart or from Amazon, right? Because e.l.f., let's say there's something that's a $5 product, right? Well, if e.l.f. sells that product into Target, e.l.f. might only make $3 off that, and then Target makes $2 off that item, right? Versus, let's say e.l.f. sells that same $5 item direct through their website. Well, now we're talking about they make all that additional margin rather than Target makes that additional margin, right? So that's huge. Additionally, you've got to be very successful online nowadays. You can't get around it. Like, so many shoppers are buying online, especially when it comes to newer generations, Gen Z, obviously my generation, the millennials, and then you could go into Gen Alpha. Are you kidding me? Like, I don't even know how much those folks will shop in the stores, right? They're going to be extremely, extremely heavy when it comes to digital first. And so you got to be in those places. You got to be on Amazon. You got to be huge. You got to have your own successful website. Now, additionally, this is very important. It's not just that they have that online position. Now they've built a massive offline position. So go into your local Target store, go into Walmart, and you're going to see likely huge sections of e.l.f. now at this point in time. Go into Ulta Beauty, massive sections for e.l.f. And so now this company is successful not only online, but offline as well. If I think about kind of weaknesses for the company, I would say since so many of their products are made in China, if there's any sort of other big tariffs that are put on, right, that could potentially hurt e.l.f.'s business models, no doubt about it. Now, if we're thinking about opportunities here, there's shelf space opportunity for e.l.f. to continue to expand shelf space because they sell through so phenomenal. When you sell through at such a high rate, basically your retailers, Target, Walmart, all these other guys, Ulta Beauty, they're basically incentivized to allocate you more and more shelf space because you move product and they're in the business of making money. So they want to make as much money as possible. Additionally, I would look at it as an opportunity as international expansion for e.l.f. e.l.f. is still heavy US, but because they're so successful online, right? On Instagram, on TikTok, on YouTube, this gives them more of a global reach. And so e.l.f. can go into a new market and be successful almost from day one because the Gen Z folks, the millennials, the Gen Alphas, they already know of e.l.f.'s brand because they've seen it on TikTok, they've seen it on Instagram, they've seen it on YouTube. They want the product. And so when e.l.f. goes in that new market, they already got a customer base that exists. It's not like people have never heard of the brand before. So the international opportunity over this next 5 years specifically is unbelievably huge for e.l.f. And honestly, the international business should dwarf the USA business, which, keep in mind, today, the USA business is gargantuan compared to the international business. Over the next 5 to 7 years, that should flip. There's way more humans outside of the United States of America to buy e.l.f.'s products than inside the United States of America. And because their products are so affordable, the international opportunity is ridiculous, okay? Additionally, e.l.f. has room to move up price points. Because their price points are so affordable, if they move price point up 50 cents, $1, it's not going to change the game in regards to people saying, I'm not buying e.l.f., but what it will do is going to make e.l.f.'s margins go up considerably and their profitability go up considerably just by going up 50 cents or $1 on items. It's a game changer for the company. Now, if I think about a threat, I don't think there's a lot of serious competitive threats out there for e.l.f., but I do think a threat is Estee Lauder's looking for a new CEO, e.l. stock, right? Another company I bought here recently. And they're looking for a CEO, and like, what if they took Terang away? I'm the only one that's been talking about this as a risk factor, and I do think it's a risk factor because if Terang got stolen away by Estee Lauder, it would be a huge loss. It does not mean e.l.f. is doomed, but we need Terang leading this company if we really wanted to maximize the potential here. So that's a threat that I think that has to be considered here. But you can see like there's a lot of strengths and a lot of opportunities for this company. Celsius. Loyal core customer base. That's a huge strength for them. They got a very loyal customer base that drinks 2 of those Celsius every single day, right? Customers view Celsius also very different than they view like Monster, very different than they view Red Bull. They view Monster and Red Bull as kind of those traditional energy drinks, like you're going out for the night to party, you're going to drink that, or you got a shift at work, maybe you drink Monster or Red Bull. Customers view Celsius in a different light, and they view it as a better product for you and for your body than Monster Red Bull. I'm not here to debate whether that's true or not. I'm just here to tell you how a lot of people view this, right? And another strength, I think, is they have big ties to athletics. They sponsor a lot of athletes. And through those sponsorships, I think gives them a lot of not just brand awareness for Celsius, but additionally, it allows a company to kind of be seen as like, oh, these great athletes are drinking your product, so why can't you drink that product when you go to the gym? Which I think is kind of genius, right? That's taking a playbook, that's taking a play out of the playbook of what company am I thinking of right now? Nike, right? Nike, they sponsor the greatest athletes in the world. They have them wear their products, they run commercials on them, and they associate with success, right? And so that's some pretty strong strengths there when it comes to Celsius. Now, as far as weakness, international business is certainly a weakness for Celsius as of right now. It is an opportunity as well, but it is a weakness for the company as of right now. A lot of these big drink companies are massive all over the world. Celsius is not yet, right? They haven't been established for a long time as a big dog company. Remember, Celsius 5 years ago, which is a very niche brand. Hardly anybody even heard of Celsius. Now, you go into any local grocery store, all these big box stores, there's Celsius product on the shelf, right? And so we haven't really seen Celsius go through the ups and downs of the market, and we're going to see that over this next year, right? Which is going to be very interesting to see how they handle that. But I would say as of right now, it's a weakness for the company. As far as opportunities, listen, they got a lot more stores to get into. They got a lot more doors. They got a lot more shelf space when it comes to Celsius. So just in the United States of America, we're not even talking about international yet. Just in the United States of America, a lot more stores, a lot more retailers to get into, and a lot more shelf space to capture in the USA. Additionally, international is like I said, like international could be a bigger business for Celsius and should be a bigger business for Celsius long term than the USA business, right? I mean, when you're talking about a drink company, it's a lot more people to drink your product outside of the United States than in the United States, right? Additionally, when we think about Celsius, they're honestly in a position to continue to steal market share, which they've done a great job of. They can steal that market share from a few different places. They can steal it from kind of the traditional energy drink companies. They can steal it from soda companies and take market share that way. And additionally, they can just add new customer base as well, right? Now, as far as threats, there's one core threat always for a company like Celsius, and it is the Monster. Monster, absolutely. Monster's a stock I owned many, many years ago. I just started buying the stock here recently as kind of a hedge, just in case I'm wrong on Celsius. Monster is a serious competitive threat. A serious competitive threat. They will do everything to fight off their competition. I mean, Bang Energy was a main competitor for a while. Monster took them to court, won cases, and then bought Bang out. Now Bang Energy is owned by Monster. It's unbelievable. They are a brutal competitor to mess with. I'm just telling you that, right? And keep in mind, Monster stock has gone up 75,000%. 75,000% over that time. Whew. And much of those gains have really come in the past 20 to 25 years. Here's the deal. You don't get your stock price up 75,000% unless you are a ruthless, serious competitor. There's no other way around it, okay? There's no other way around it. And so Monster's a serious competitive threat. This was back in the end of August. I posted this in the private group's Discord chat, right? Which we have a Discord chat for a ton of different stocks that I own or just popular stocks in general, right? And this was in the Celsius chat. I wanted to show you guys this post I made way back then. And, because it was interesting because Ryan, one of the members of the private stock group, right? He posted this photo here, right? And then, like, pretty much that same day, I go to Albertsons, kind of near my house. And I'm at the checkout, and I look, and I'm like, oh, there's a Celsius stand there. And I had to do a double take, and I said, wait a minute. No, that's not a Celsius stand. That's Rain Energy, which is owned by who? Monster. Look at this. They pretty much copied the whole vibe. Now keep in mind, a lot of people are not so ingrained in a brand that they would even realize this is like a different product. let's say your coworker's drinking one of these, right? You see them at work and they're like, oh yeah, this is delicious. I love this product, right? And you go to the store and you're like, oh man, it's one of those products my coworker had. I'm going to grab one right now, right? And next thing you know, you're not even drinking Celsius, you're drinking Reign, right? Now you're hooked on Reign rather than Celsius. It's genius. And that's the type of stuff I'm talking about. Monster's a brutal competitor, man. I'm telling you guys, they're tough. And so if I'm thinking about a threat, absolutely. Like, Monster's a serious threat that has to be considered. And that's why I'm buying Monster shares as I'm buying Celsius shares, just in case, okay? But the thing I'll say is Celsius's like brand is in such a great place when it comes to, they're just in a lot of like worker markets now. ER, if you work in a hospital, high probability Celsius is all over that hospital. I know some folks that are, kind of in the medical field, let's just call it that. And from what I've heard across the board, like, if you're in a hospital, there's Celsius right there all the time. And a lot of times they don't have Red Bull as an option. They don't have Monster as an option, but they do have Celsius, which is interesting that healthcare professionals are drinking the product. I think, if anything, that's a good sign rather than not being in those sorts of places, right? One of our private group members posted this back on September 16th. They posted in the dirtiest fridge I've ever seen in my life. I guess it's a mechanic fridge here. They're all drinking Celsius, right? Great to see. This is at Costco. A member posted this on September 25th. Thought this was interesting. Massive section of Celsius there at Costco. This was in Saudi Arabia. One of our members of Private Stock Group on September 28th posted this photo here. This was in Saudi Arabia, which I thought was very interesting. Once again, international still like baby market for Celsius, but it's good to see the brand starting to get out there into some of these markets, right? There's a member posted this inside the Celsius chat yesterday. This is at Amazon Fresh. They posted this. So Amazon Fresh stores, which is a thing, and I own Amazon, so I'm happy about that, right? But these products sell insanely well. There's no doubt about it, and the margins are good on them, right? It's a good margin business because they don't have to be refrigerated, they don't have to be frozen products to get delivered to stores. They can be delivered at room temperature, and Celsius makes good margins on these products, like very good, healthy margins on their products, and they sell dang well. If you track steals at any of these stores, it sells phenomenal, man. So the moral of the story is Celsius is a dang impressive company, and they got a dang impressive product in the market, and that product sells extremely well and is very, very sticky. And the same could be said for e.l.f., right? And it's not just my opinion on that, it's like the numbers show it, the charts show it, right? Here, looking at 1000X stockholder equity for e.l.f., it's all-time highs. I mean, the balance sheet's in a phenomenal position for e.l.f. When it comes to Celsius, look at that shareholder equity. It's gone to the moon. And Celsius is in, keep in mind, these are smaller market cap companies. These are less than $10 billion market caps here. And so their balance sheets are in a phenomenal position. Their shareholder equity is looking great on these companies. So that gives me a great peace of mind that, okay, let's say, the revenue's slow for the next, 6 months, 12 months. It's fine. It's not like these companies are like a bankruptcy risk and it's like, oh my gosh, their balance sheet's so bad. Like, if they, numbers weren't quite there, they're in big trouble. Like, no, these companies are in great financial position and great financial standings. Additionally, look at Celsius's trailing 12-month revenue. Is that not the most beautiful chart you've seen? I mean, look at that. Look at that. That's a beautiful, okay? Beautiful. That's what I want to see out of a company. Phenomenal. Now, in regards to Celsius, here's the problem. Short-term dips expected, right? Analysts are expecting the next quarter or two to be very weak as far as, Celsius numbers. But why is this? Is it just like people stop buying Celsius or something like that? No. Here's what's actually going on in regards to Celsius. They got a big Pepsi distribution deal in this that kind of really started to roll through in the second half of 2022, right? And so 2023, there was this massive, epic kind of, let's call it product moving into Pepsi's hands to distribute Celsius product all throughout the United States and maybe even take them to international, right? Which is great news for Celsius. They need a distribution partner like that because Celsius can't really build that themselves. Like, that's so costly, it's ridiculous. So you need to partner either with Pepsi or you need to partner with who? Coca-Cola. Coca-Cola might not be as interested in partnering with Celsius, and here's why. Coca-Cola nowadays owns a substantial portion of Monster Corporation, Monster Energy. So Coca-Cola isn't as incentivized to distribute Celsius all over the place if it is seen as Celsius potentially taking market share from Monster, right? But Pepsi, on the other hand, they don't have any really truly super successful brands that they own. So Pepsi now owns a portion of Celsius, right? And Pepsi's able to distribute that. But the issue is, in 2024, Pepsi's cutting back on a lot of inventory, and they're changing their systems to run inventory much more lean when it comes to Pepsi distribution, which is great news for Pepsi long term, because you don't want to have excess inventory just laying in warehouses. That's money, right? That's money. But for 2024 numbers here in the second half, it's bad news for Celsius short-term numbers, because you kind of got to work through a bunch of inventory. Pepsi's going to run really lean, and then we can worry about sell-in coming back through in 2025 for Celsius, right? But at the end of the day, like, this is just short-term mumbo-jumbo. Who cares? Who cares? Like, all I care about is that Celsius's brand and revenue is going to grow massively over the next 3 years, 5 years, 7 years, 10 years. Whatever happens in the short term, next 2, 3, 4 quarters, to me, it's irrelevant, especially when it's not a customer-related thing. It's more of a Pepsi-related thing more than anything, right? Now, when it comes to e.l.f., look at this. Is this not epic? Look at the trailing 12-month revenue for e.l.f. It is incredible. And on a company that's market cap is less than $6 billion right now, right? But next 4 quarters are expected to not be all that exciting for e.l.f., right? This is the quarter we just had through in regards to trailing 12 month, and these are the kind of quarters we're going into, right? And so now everybody's freaking out about e.l.f., like growth rates aren't going to be that exciting, this and that, right? Even if their growth rates were slower over the next few quarters, at the end of the day, I just so confident this company is going to be able to increase their revenues and profits so dramatically from here over this next 5-10 years that whatever happens in the next few quarters, who even cares? But with that being said, I don't think analysts are right. I don't think they're right. With their pessimistic revenue numbers here, I think they're wrong. Big time wrong. Here's why. e.l.f. has beat 14 straight quarters. And when I say beat, I'm talking double beat. They've beat on earnings per share and revenue 14 straight quarters. You're going to tell me that's a company you want to bet against? I don't think so. I want to be on their team. I don't want to be against them. I want to be on their team. That's incredible, right? And so with these analysts being so pessimistic on numbers, what do you think the higher probability is here? Do you think the higher probability is these analysts are right? And next thing you know, e.l.f.'s numbers are just crap the next 4 quarters? Or do you think maybe over the next 4 quarters, e.l.f.'s going to come in and double beat, double beat, double beat, and double beat? I'm going to go on the side of e.l.f. I think e.l.f.'s probably going to come in and double beat quarter after quarter after quarter for many quarters. Could be wrong, but I'm willing to take that risk. The fact that this company's beat 14 straight quarters, I think they are pretty dang good at beating whatever analysts are expecting for this company, right? Now, back to Celsius. So Celsius, these are numbers and projections I ran about a week ago. Okay, now at this time, Celsius' stock was $30. It's $28 now. Okay, so keep in mind the compounding annual growth rates are even going to be higher than what I have here in these projections that I ran about a week ago or so. So my base case for Celsius is 15% revenue growth from 2025 to 2028 on average per year, which puts them at about $3 billion, just under $3 billion of revenue in 2028. And their net income, I have that going up 15% a year as well, gets them to 15% net income margins, which is not super high for the energy drink category. If you're growing 15% top line, 15% bottom line, 30 to 40 PEs, you're going to command somewhere in there, which is the stock price going to $57 to $75 come 2028, and the stock's $28 today, which gives you a compounding annual growth rate of around 20% plus. So my base case for Celsius is not crazy. It's very realistic in my opinion. And I see this as being a pretty big compounding annual growth rate type company. When we talk about compounding annual growth rates on a base case of 20%, now we're really talking, right? And keep in mind, Celsius has been growing revenues like 60, 70, 80%, like ridiculous numbers. 15% is really bad compared to how Celsius has been growing. So the moral of the story is when I talk about compounding annual growth rates in the 20% range on my base case, that's what I like to see. Now, if we look at my bear case for this one, this would be 5% revenue growth per year on average, which would just be, I don't even know how it would be that bad, but let's just say it was that bad. Net income growth of 5% per year over these coming years, which I don't know how it would be that bad, but we're just going to assume those numbers. 5%, 5%, maybe you command a 20 to 25 PE, puts the stock somewhere around $26 to $33. Stock today's 28, which means basically I would make no money in this stock over the next 4 years, which would be extremely disappointing. But how realistic is it that Celsius only grows 5% a year on average? Top line, bottom line. Like, how realistic is that? I don't think it's very realistic at all. When we consider next year alone, in 2025, the company is going to get back to very nice double-digit growth, right? And then remember, they're going to be comping against these easy numbers. All these crap numbers in the back half of this year, they get to comp against these next year, when the Pepsi distribution issue is no longer an issue. So imagine what Celsius's growth rates are going to look like at this time next year, right? This is something that's got to be factored in here. So my bear case, yeah, I don't make any money, but I also don't really lose any money in this situation, right? Other than opportunity cost. Now, my bull case for Celsius is the following. Keep in mind, this is probably a very conservative bull case. 20% revenue growth on average over the next 4 years. 25% net income growth on average over the next 4 years. They would get to net income margins of about 18%, which would be a very good, healthy number. Nothing crazy, like some of these drink companies can get to like 20% range. If I kind of put a 40 to 60 PE on this, which if you're growing 20% top line, 25% bottom line per year, and in the energy drink category, sticky business model, 40 to 60 is easy as far as those PE ratios. You're at a stock at about 105 to 158, which we're talking about then compounding annual growth rates based upon today's share price of 40% plus. 40% plus. Keep in mind, these growth rates aren't even remotely close to what the company's been putting up over the last couple of years. So, the moral of the story in regards to Celsius is it's a damn buy and buy and buy and buy and buy. And it's one of those stocks you just got to kind of hope goes lower in the short term. Now, when it comes to e.l.f., here's my base case for e.l.f. over the coming years. I have the company having revenue go up 20% on average a year over the next many years. And keep in mind, this company's been growing revenues like 70, 80%. So 20% would be a really bad number, right? 20% on average for these 4 years. 25% bottom line, they should increase their net income at a faster clip than revenue from 2025 to 2028. They put them in net income margins of a low 11%, which is not a very high number. PE ratio, 40 to 60 is about appropriate for e.l.f. if they're growing top line 20%, bottom line 25% on average. In the cosmetics industry, this is a consumption-based business model, very similar to Celsius, right? Somebody runs out of Celsius, they go buy another Celsius, right, before work. Somebody runs out of mascara, they run out of some lip gloss or whatever, they go buy another one. And if they're used to using e.l.f. and that's a brand they like, they go buy another e.l.f. product, right? So it's a consumption-based business model. It's kind of like these sorts of business models are kind of like almost like a services type business model, right? Almost like a SaaS play. Just they're not selling to business, they're selling to consumers. So in e.l.f. situation here, that puts the stock price between about 190 and about 285, which gives me a compound annual growth rate on the low end of about 17%, on the high end of just under 30%. So e.l.f., very attractive here. And keep in mind, those numbers might end up being low, right? They might end up being low when it's all said and done. So when it comes to these companies, you got to keep this in mind. Very important. You're going to see tax loss harvesting in these stocks over the next 45 days. There's no doubt about it. There's a bunch of money losers in these stocks over the past 2 years. If you bought these stocks likely in the last 2 years, specifically in the last 18 months, you're probably down on your shares. And there's a lot of, those kind of momentum type traders, swing traders. There's a lot of people that made a lot of money in big tech over the past year or so, and they're going to be looking to offset some of those gains with losses so they don't have to pay taxes. And so where better to look than stocks like e.l.f., stocks like Celsius that haven't performed. So you're going to likely see tax loss harvesting in these stocks, which is, just something you have to expect. So that's why I don't expect strength to come in these stocks in the next, few months here. But I think 2025 shapes up really, really good for both those stocks, and then obviously a long term. So that's why I view these stocks as buying every share in sight. Give me every freaking share of these two stocks. And Celsius is obviously a bigger focus for me because e.l.f. I already have a very nice size position. Celsius I got to build up a lot more. Okay. Alrighty, guys. Appreciate you joining me as always. Hope you really enjoyed this video. Hope you got a lot of value out of today's video. If you're looking to learn everything I got up here, take my brain, implant the chips into your brain, click the pinned comment down there, apply to join my private stock group. You get access to all my best course curriculums, access to the private stock group's Discord chat, access to exclusive videos, all that good stuff. And 1000xstocks.com. Can't forget that. By the way, I got the Ferrari video on the channel if you want to see that. Much love and have a great day.